Good afternoon. Today we'd like to present to you on Daqo New Energy Corporation, which is a corporation located in China, and this is inside the polysilicon industry, which is a rapidly rising industry. My name is Jehseok.
I'm Tasha, Mama Tajudin, and let's begin. So first of all, Daqo New Energy Corporation supplies polysilicon to photovoltaic product manufacturers in China, so it's internally based in China. They are a leading manufacturer of high purity polysilicon for the Chinese solar PV industry. They are a low cost producer in the industry, with expanding capacity to 30,000 metric tons by mid-2019. Very importantly, Credit Suisse led managed in April 2018 110 million stock offering, and we will be diving into as to why that is important.
Moving on to our investment thesis, we rate the Daqo New Energy Corporation as a strong buy. The target price is of $66, and the current price is of $52. And this is an increase of 27%, which is a large uptick. Moving on to why we believe that there will be this amount of growth is, first of all, this is a rapidly growing industry. This has a 20% per annum growth, and the renewables, about 40% of China's energy needs are going to be fulfilled by these renewable energy sources. Moving on, downstream integration. They have about an 18.4% wafer growth in 2017. Wafers are the next step to polysilicon. This is what gets led on to creation of solar panels, and this is a specialty that Daqo New Energy has in. And also, this is a solution to climate change. And climate change and global warming is a huge issue that China has. And this led to the Chinese government to full support this, and a solution to this is polysilicon, because these solar panels are this type of a renewable energy source.
In addition, Daqo New Energy's order book is 90% full as of February of 2018, with the firm endorsing multiple long-term contracts with China's top-tier solar manufacturers.
Moving on to our industry update. First of all, again, they are one of the world's lowest cost producers of high-purity polysilicon and solar wafer. Again, China is the world's largest market and producer of photovoltaic products. This is due to the fact that they have a cheap labor force and also a cheap cost in electricity. Daqo is again one of the largest players in China with access to low costs, as they're located in west of China. And also, the Chinese government policy is very favorable towards renewables, and tariffs are as high as 55% protect China's domestic industry. This is very helpful for Daqo since they are operating within China and in the domestic industry. And this Chinese government policy and the tariffs actually protect from these Chinese domestic markets from buying from rather German photovoltaic industries or from the American industries. Moving on, China views energy independence as a strategic asset, and renewables are a part of that strategy. And they're trying to move away from energy dependent from fossil fuels and oil to rather more of an energy independent, as they try to focus more on the renewables such as the solar panels. And this will help out Daqo.
Moving on to the revenue and share price drivers. First of all, expansion of capacity. As said before, with the increasing annual demand for polysilicon and solar wafers, the company has planned to expand its production by at least 12,000 metric tons in less than 18 months, reaching 30,000 metric tons per annum. In addition, renewable energy. Solar power was the fastest growing source of new energy worldwide last year, so the rising demand will definitely meet the rising supply. And in addition,
recovery from China discount. Now, China discount was this happening in 2013 and 2014, where these Chinese markets actually opened up to the American stock holders, and they expanded out from only China to American stocks and more. But then many of them actually were frauds. They did not project as much as the numbers they had written that they will project, and all these frauds led to this scare within American stockholders or just stockholders in the foreign areas. They had a fear of these Chinese stocks, and this led to a mass discount in these Chinese stocks such as Daqo. However, why this is actually a revenue and share price driver is because Daqo's share price will benefit as the market better understands its strong market position and know that this isn't a fraud. And this can be shown through the Credit Suisse offer of $110 million. And this is why it is very important, because that shows and that just proves why and how this market is showing confidence in their belief for Daqo, and this actually will help Daqo in a huge amount, as this will help their balance sheets and market position along with their management. And moving on, this is the graph for polysilicon capacity expansion. At phase 2A, or in 2013, there was only about 5,000 metric tons. And currently there's about 18,000 metric tons, but they're expecting up to 30,000 metric tons of an increase in phase 3B. And this is showing how they're increasing their polysilicon capacity expansion with the demands of China.
Moving on to Mohd analysis, size advantage. A leading manufacturer in the polysilicon industry in China, Daqo has a relatively large size, which allows them to achieve economies of scale, meaning the increasing expansion of capacity leads to the low cost, the fall of factors of production. In addition, China's extensive tariffs. One thing that China has been doing really well is not tearing up its tariffs, which in addition helps ensure longevity of domestic brands such as Daqo. Other than that, they're a low-cost producer. The low-cost electricity prices in Xinjiang, which is the western part of China, low-cost silicon costs and low equipment costs are main reasons as to why Daqo is a low-cost producer in polysilicon in China.
Moving on to Porter's Five Forces, we have briefly talked about this, and we will state this more further on, so due to time management reasons and more, we will skip over this, but this is in our report.
In addition, financial analysis. So the polysilicon production volume has increased 54% to 20,000 metric tons in 2017. The strong sales and earnings per growth. Daqo share price surged by 100% over the past year. Their revenue has an increase of 54% in the past year to 352.9 million in 2017. The EBITDA non-GAAP of 167 million, which is an increase of 68%, around 70%. The net profit also has an increase of 113%. And the adjusted earnings per ADS, non-GAAP again, in 2017 has an increase of 85%.
Now moving on to some of the financials, you can see that the revenues has grown from about $100 million to about $350 million by 2017. And again, if you look at the earnings, they went from a negative loss to about a $9 profit, and we believe that this profit will continuously grow. And this demonstrates Daqo's strong operating leverage as it increases operating income and net profit at a significantly faster growth rate than sales. And moving on.
Although this company will have great flourish and has had great growth, there will be, just like other companies, there will be some investment risk. One is political instability. The unpredicted decisions regarding the relations between various nations can lead to internal and external international trade conflicts, and with the consequential imposed tariffs for solar photovoltaic or PV products. In addition, contraction in the business cycle. Unexpected fluctuations in the economy can have drastic impact on not only the solar panel market, but also the PV industry. Moving on, furthermore, trade conflicts and tariffs. The Republican White House is talking tough on trade with China, which can furthermore lead to a negatively impact on tariffs and other protections to China's domestic solar industry. However, the United States is not a large exporter of polysilicon, and China views the energy sector as a strategic asset.
So going to our stock price analysis, if you see by 2014 and 2015, again going back to the idea of China discount, this led to a mass discount and a mass drop in the prices. Yet with the continuous expansion in polysilicon capacity, they have reached again back to what they usually were in about 2014 by now, with around the range about $50 to $60. But then with the continuous expansion and with the offering, we believe that this will continuously grow. And this leads to our valuation. Our 2018 target price is $66 per share for Daqo New Energy, which represents about a 27% upside from its $52 share price currently. And Daqo New Energy Corporation is currently trading at a trailing PE of 6 times, which is much lower than the industry average of 20 times. We expect a 2018 earnings per share of $11 per share, and assuming that there's no PE expansion, we target a $66 share price. But again, the average PE was about 9 times, so there's even more potential for an upside. Thank you very much.
Thank you.
Thank you all very much for that. couple of questions. You mentioned low cost as being very important for this company in its sector. Can you talk a little bit more about specifically why it's low cost? In what areas does it have a lower cost than others, and how does it benefit the company?
Well, there are three main areas of low cost that definitely will benefit the company. One is access to low cost electricity. As said before, mentioned, this company, Daqo New Energy Corporation, is located in Western China, which means that part is more of a remote part of China, therefore having low cost electricity. And in this industry specifically, polysilicon uses a large amount of electricity to produce its polysilicon. So that can definitely be one of the reasons why it's really beneficial for this company. Secondly, access to cheap and low-cost labors. Again, this is in Western China. It's remote. Access to cheap labor is access to labor is more affordable than coastal and eastern parts of China in the financial hubs and central business districts. Furthermore, access to low cost in raw materials. This remote area has a lot of mines, and the company is able to access very cheap and affordable raw materials. So that can definitely benefit the investors and the company itself.
Okay, thanks for that. You mentioned on one of your slides that EPS has grown by, I think it was 85% from 2016 to 2017, but you're not forecasting that kind of growth from 2017 to 2018. You have growth going to $11 a share. Why do you see growth slowing down? Is the sector changing? Is the company slowing down? What's happening there?
Now, we're projecting only about an $11 increase due to the fact that there's a lack of polysilicon capacity expansion. At the time of 2016 to 2017, there was a large Phase 3A movement which increased the polysilicon capacity to which is currently about 18,000 metric tons. And until 2018, there's no specific phase or capacity expansion plan that is shown there. But then, although yes, therefore the growth might be slowing down, in 2019 they'll reach 30,000 metric tons, and there will be a mass expansion again. And we believe that when it reaches 2019 or more in the long term, there will be a significant growth and a significant increase.
Thanks for that. You mentioned that tariffs are important to this business.
Yes.
How does China as a country view this industry? What's their view towards solar and energy and renewable energy in general?
Now, they're again they're continuously focusing on this type of renewable energy sources and the solar panel industries as aforementioned, climate change and global warming is becoming a huge issue with the issue of pollution and all that going on in China. So they're trying to focus on how to use these energy sources, renewable energy sources, and try to move away from these fossil fuels or these use of oil. And therefore this led to their continuous strong government subsidies and the support for the solar panel industries, as solar panels and polysilicon can be used so that they can transfer sunlight and solar energy into electricity and energy that we can use. So they're continuously moving towards and supporting these types of industries, and there's strong support within the government.
Other than that, China is also a prominent figure in the United Nations, and they want to set an example to other countries regarding the climate change commitments, such as COP21, the Paris Agreement, and further upcoming conference of parties relating to the climate change under the IPCC. So yeah, China wants to set examples to other countries for them to follow the solar panel industry.
Very good. Thanks very much for that. Last question for you. This company right now is trading at only 6 times PE. That seems really cheap. Your target right now is $66 a share for 2018. What do you see the future of this company being?
Now, again, this goes back to our China discounts. This issue where a lot of these Chinese stocks were known to be frauds, and this led to a lot of the stockholders and many people who were buying stocks as to be scared of rather of these Chinese stocks, and this led to a mass discount of this China discounts on these stocks. And I think therefore this is why Daqo is in such a low PE compared to the average of about 20.5 times. But again, with the story of just about in about April 18th or so very recent, with Credit Suisse actually giving them an offering of about $110 million. This is showing that yes, they do indeed have trust for them, and this is showing that even that Daqo will have credibility and they have confidence in Daqo. So we believe that this China discount will be rather gone now, and then this fear of Daqo being a fraud will slowly decrease, and this will continue on with the demands rising for polysilicon in China and the capacity expansion in Daqo. These will all add up so that Daqo will have a continuous increase in their stock prices and also in their value. Thank you.
Very good. Thank you both very much. Appreciate it.
Thank you.